Good morning, guys. It is Wednesday, November 6th, 2024, Bathrobe Business. The day after Election Day, I've got the coffee and I've got the news. So by now, everybody probably knows that Donald Trump has won the 47th presidency of the United States. Like I said, I don't usually go too much into politics, but obviously a scenario like this, it's impossible not to address because it influences the market so heavily. So let's jump into it. A couple of things I want to highlight first. So the first is commodity prices. So my favorite indicator, let me make sure it's being shared. Yes. So gold is down. Gold is down about 80 points, which honestly is fantastic. So this is actually where it's going to get complicated, but we'll dive into it in just a second. So gold is down. Crypto is up. So let's talk about gold first. So gold is down because there is strengthening in the dollar because obviously Trump has protectionist policies. They're going to see that as a rise in the strength of the US dollar, and therefore commodity prices are lower in comparison. This is great news because, as I've always talked about, the price of gold is directly tied to inflation in ways that nothing else is. Not crypto, not oil, not housing, not anything. Gold is one of the most powerful indicators that everybody just forgets and they think is antiquated, but it isn't. And this is a great example of it because the second that the dollar strengthens, gold responds in an opposite direction, whereas things like crypto do not. Now, I know there's going to be critics out there saying that's because Trump is pro-crypto. He is, but there's something else going on here as well. So gold is coming down. So that's good, strengthening dollar. I do think that this is a temporary setback, and I will explain why. Donald Trump is definitely going to put pressure on cutting interest rates. And as interest rates start to get cut in his administration, they are going to cause some sort of inflationary pressure, even if not in the greater market through CPI and PCE. They are going to cause inflation in relation to gold because the borrowing is going to increase, deficit is going to increase. Trump does not govern like a traditional Republican. He likes big spending, which honestly, all Republicans like big spending. They just usually focus it towards just the military and defense, whereas Trump kind of just sprays it everywhere. So he is very populist in his understanding of the economy and therefore doesn't just locate it to traditional neocon sectors. So I think this is a temporary pullback on gold. I would tell people to take advantage of it simply because within the next 2 years, I do see this going back up. I do think this might even drop a little bit further. I think we're going to start seeing it creep towards 2,500 and maybe below. But I do still see in the long run, within the next 2 to 3 years, it going up. But I think that this maybe doesn't spoil entirely, but I think this does kind of get rid of the narrative that gold will hit 3,000 by the end of the year. I think it's more of an uncertain point at this point. So let's talk about crypto. So crypto is up. Bitcoin hits a record of 75,000 as Trump victory heralded wider crypto adoption. So let's jump into that. So crypto is up. Now, a lot of people will say Trump is pro-crypto. That's why it is up. Obviously, that's true. However, there is something else going on as well. So crypto traditionally actually moves a lot like any other financial product. It doesn't move with the inflationary market as much as people think. When the stock market takes heavy hits, even like single day hits, Bitcoin will be down as well. It moves much more like an equity than it does as a commodity. During the shutdown, the COVID shutdown, it dropped heavily as well during that period, whereas gold spiked. So Bitcoin, in a lot of ways, does still move very much like a traditional equity and not like a commodity. But let's jump into the fact that Trump is very pro-crypto. So this article talks about just that very point. There's a lot going on here, but three things that I will highlight. Trump has promised a national strategic crypto stockpile. So essentially, currently, any crypto assets that are seized by the State Department, the Department of Justice, FBI, you name it, are essentially auctioned off. The United States does not hold it. With the Trump administration, he says any seizure of Bitcoin will mean that we hold on to that Bitcoin and keep it as a strategic reserve. He's also calling for the firing of Gary Gensler, who is the U.S. Securities and Exchange Commission chairman. I think his term is going to end within the next 2 years anyway. But he said, so I don't think he actually has the power to fire him, but he does have the power, obviously, to elect a new SEC chair, and he's going to select someone that is obviously much more pro-crypto. All Bitcoin to be mined in the United States. So this one is going to be the fact that he is going to support network and technologies that aid in mining domestically. He talks about how increases in energy will allow for this with lower energy cost, better infrastructure, et cetera, et cetera. So he is calling for much more Bitcoin to be mined domestically, not from a federal standpoint, but from a private standpoint. But then finally, we're going to address Fed rate cuts. So this is probably going to play a major role because as I've said, Trump is very, very populist, and he does not like high interest rates. He was putting pressure on Jerome Powell to cut interest rates during the very first Trump administration when they were, 1%, 2%. He was calling for lower interest rates. That's going to lead to the inflation I'm talking about. That's going to lead to a rise in gold, but it's also going to lead to a rise in crypto because even though I say that, well, crypto doesn't move like a traditional commodity, it still is steeped in counter inflationary pressure. So anytime you're going to see inflation, it's going to rise in value as well. So in that regard, I think there is going to be a rise in crypto over the next 4 years, just simply because he is going to put pressure on the Fed to cut. Now, this is where the debate starts. What happens with interest rates? So I'm going to highlight an article here from this one, I believe, is from the Wall Street Journal, and I can't seem to find it. Okay, here it is. So here's why Trump's win sent the dollar and bond yields higher. So this was the interesting one. So even though the dollar obviously has gotten stronger just from the election alone, bond yields for the 10-year have gone up. In fact, they've gone up to a multi-month high, a 4-month high of 4.5%. So we could be asking, well, why would a 10-year Treasury bond be up in relation to a strengthening dollar if we're seeing aggressive cutting in interest rates from both the Fed and what Trump is heralding as well? Well, so this article makes the counter argument that for the bond market, we're going to see a strengthening U.S. economy. So as the U.S. economy gets stronger, this in turn will cause the Fed to become more restrictive with cuts. And because of that, the 10-year is going to be up. So in a short term, we might see cuts over the next year or two, maybe even just over the next couple sessions. But over the long run, the strengthening dollar and strengthening economy will lead to a tightening policy from the Fed. That could be possible. That did happen during the first Trump administration, that the Fed was tightening. However, I don't know if I would bank on that specifically, just simply because Jerome Powell's term ends in 2026. And let's be honest, the Federal Reserve is not free of politics. The entire move to cut over the last year has been political. I will be damned if you try to convince me of anything else. Given the strength in the economy, given the inflationary pressure we're seeing, there was no reason to cut into this economy, especially a historic half basis point, 0.5% cut. That's just unheard of. That doesn't happen outside of crises. That's a political cut. There's no question about it. And Trump uses the bully pulpit very well. And so I think he will be putting pressure. And even if he isn't able to put enough pressure on Jerome Powell's term ends in 2026. He's going to find someone that is going to be more favorable towards his cutting policy. So I would say that over the long run, I don't believe that the Treasury 10-year is going to stay high much longer. I think there's going to be a drop. I think interest rates are going to be continuing down progressively. The next Fed meeting is actually on Thursday. We'll see what Jerome Powell does. I think this will be, earlier I said that this is going to be the most independent cut that the Fed makes, and I still think that's true. But it's also going to be a prognosis of what to expect in the Trump presidency. So if the Fed is going to say we're going to keep interest rates where they are, I think we're going to see an adversarial climate between the Fed and the presidency. But I still think the presidency is going to win out because I still think politics wins at the end of the day. But I do think that will be a prognosis. If we're seeing that the Fed is going to be cutting, then I think that we can expect that they're going to continue to cut throughout the next several sessions, despite what the market does, especially when you consider that when I say political, we're not just talking about Democrats versus Republicans. We're also talking about national debt. And we're talking about the Federal Reserve is getting pressure from governments to cut interest rates so that spending can continue, especially under any presidency, Republican or Democrat. Both of them are big spenders. So I would bank on a strengthening dollar over the next 4 years. I would bank on lower interest rates. I do think the stock market is going to be a good place to go, but I see inflation going much, much higher. So I would look for anything that hedges against inflation: land, gold, crypto, possibly oil, things like that. So anything where you've got a fixed commodity, like Paul Tudor Jones talked about in the last video I shared with you guys on Friday. I think that no matter what, inflation is going to be baked into anything that happens over the next 4 years. So no matter what you invest in, despite the fact that equities are going to be a great place to be for the next 4 years, I think commodities are going to be a fantastic area, regardless of what happens. Now, let's talk about another little factor. Let's talk about tariffs. So, this story is from Reuters, and it talks about BMW concerned about U.S. tariffs as car stock plunges. Now, they reported a bad quarter, but in addition, they are definitely concerned about tariffs on their cars coming into the United States. I would probably bank on that as well. Trump actually, I think it was in the Rogan interview, highlighted that he was going to get more strict with Europe specifically. Everybody talks about him and China, but he did, I believe it was in that interview, talked about Mercedes and BMW and about how we're going to get stricter with tariffs with them because we allow their cars in more easily than they allow ours into Europe. So I think that will probably happen. I do think that there could be a short, maybe not a full short strategy, but there could be shorting of the market in regards to foreign autos. Another factor we're going to talk about, I kind of already talked about the Fed. This was just another article talking about the Federal Reserve and what might happen, but we kind of already talked about that as well. Now, here is another thing to talk about, and that is the shift in antitrust. So, this is, I think, going to be the biggest tragedy of the Trump administration, and that is, I think, the inevitable replacement of Lina Khan. Now, J.D. Vance has praised her, said she's doing a great job. I would love if she stayed on. I think she is the greatest asset of the Biden administration, of the last several administrations. She is one of the few bureaucrats and one of the few elected officials that I think does a fantastic job. She has brought suit against multiple corporations. She has worked to break up major corporations to be a barrier to major mergers. And obviously, she has gotten major pressure in an antitrust suit against Google. The antitrust suit, of course, streams to break Google up into multiple companies. Now, you would think that Trump would be very anti-Google, seeing as how he is anti-big tech, but he is actually quoted as saying, if you do, in regards to a breakup, if you do that, are you going to destroy the company? What you can do without breaking it up is make sure it's more fair. He even said at a recent event in Chicago in October. So he's saying that you can get more strict with big tech through regulation rather than breakup. So that's very sad to me. I think that would have been fantastic to break up Google into multiple companies. I don't see how you see Google as anything other than the biggest monopoly that's existed in the history of the world. And this could have been a major also spur for new growth and new economy, as now there could be major competition directly in opposition to Google. But that's probably not going to happen. And I do think that despite the fact that J.D. Vance has praised Lina Khan, I just don't see her staying on. I think they're going to put a traditional FTC chair in that is just going to sit there and rubber stamp a bunch of different things. And we're not going to see the breakup of these major corporations like we had hoped. That, I think, is going to be the biggest tragedy of anything that we talk about over the next several months. Idiots like to talk about fascism and I don't know, Nazism or whatever else they're talking about. This is really just going to be the biggest issue. Last thing, I'm just a couple of little stories I'm going to talk about. Actually, seeing as how we've ran kind of long on this, I'm probably going to keep it there and just keep it as a Trump directed story today. So I will be back here tomorrow. So I hope you guys have a productive Wednesday, and I will see you tomorrow morning. Bye.